Okay guys, welcome back. Here's my read on the stock market from what I'm seeing today. Leave me a thumbs up, leave me a comment below. And again, if there's any stocks that you're watching where you want me to analyze in a video, leave that in the comment below. Or if you have a setup, a trade setup, and you want to share it, maybe you've taken that trade and you want to share it with people in the community, then leave that in the comment below too. Always looking for good trade ideas myself. So, all right, so here's the S&P 500 and here's the hourly chart. Again, we're just covering the concept of this island top reversal right here. So this was a reversal pattern and we're trading this right now. The trade is all built off of this setup. So if I go to the daily chart, this will outline the setup here. You've got the island cluster top right there. Anybody who's not familiar with what that is, it's a set of candles making a cluster separated by gaps on both sides. Typically, these come at the top of an extended run up, or if it's, you can flip it the other way too, and they can come on the bottom of a big run down. So this is on the run up here. We've got the island reversal pattern. Everybody sees this, so this is a very clear pattern. So now, because it's easily spotted, we're looking for, moves to shake people out. The algos see this, everyone sees this now, market makers see this. So now you're looking for the fake out move. This pattern is set up to be a topping pattern and a reversal. But again, in modern times, you oftentimes get some sort of a counter trend move that goes against that just to knock it out, or run some stops of anybody that thinks this pattern's valid, only to stop and then reverse, and then the pattern works out. So we continue to watch for that, even though it hasn't played out yet. It still could. Now here's the hourly chart. So there's your island top right there. We'll just kind of keep a notice of that. And look where we're at today. So we've got support, which was support at 314 on the hourly chart for the S&P 500. You can see that if I zoom in, you can see lots of rejections at this level at 314. It's about 314.20. Rejected here, ran up, held, rejected there. Again, right here, see this wick? We popped above it, but it still failed and closed below it, and then we held below it there. And then finally, they were able to gap up over this, and I think that came Monday or Sunday night or something. They gap up over on Sunday. Yeah, that happened on the 6th, which was Monday. So that's interesting that they were, to move above this, it took Sunday night futures market trading action. Sunday night is a very, very thinly traded market. So the bullish move above this happened on extremely thin volume in the futures market on Sunday night. So just something to pay attention to. But again, it held all week. But then nice impulsive breakdown today, and we're now having a kickback up into this, but I see this probably holding as resistance right here. So this might be an objective. This is an objective area to short. Doesn't mean it's going to work out, but this is a clear, good risk reward, I guess, for shorting here. And if it rolls over here and this is just the kickback rally, then we can look to a move down probably to the bottom of the range around 300. You can see, you've held this down here. So if that starts to run down, then that would be a false breakout right here. Also, another way to look at this is, we entered the gap right here of this island cluster. This is the entry of the gap, and it looked like it was going to fill. They tried it several times, right here and here. And if the market continues to sell off right here, then that's the inability to fill that gap. That you have to read that as bearish, because typically when you enter a gap, it fills. That's just how gaps work. When you enter a gap, it fills, and then maybe it rejects at the top of the gap. So that is something that if it can't quite get to the gap and just starts to sell off here, then you have to read that as bearish. And again, that keeps this topping pattern and this reversal pattern in play. If the reversal pattern continues to work out, then you have to go to the daily chart and you have to see this as a bigger picture and look for a move down to 300. And a lot of the trend followers will say, well, we haven't made a new low, so the trend hasn't reversed. The trend is still up, and that's fine. That's true if you're using, higher lows and higher highs as your method for trading. There's nothing wrong with that. But I see this as the reversal pattern right here. So we have divergences, negative divergences. We've got a reversal pattern. And if we can't fill the gap and we start to look weak again, then, maybe that is bearish. Now on the daily, you can see they're trying to hold that we're right here at the 314. So it should reject here, but it might not. Maybe it just holds today and they make another run at the gap tomorrow. That's all completely possible. They might want to close out the week on a Friday, filling that gap right there, maybe even popping above the gap. And again, that's what I've said ever since this pattern has been in play, that here's how you trade these. You can take the short of the gap, but oftentimes they try to shake people out of this position by running it back into the gap and popping it into the cluster right up here. They should not recover the top of the cluster. They should not be able to pop it up into this range around 323, but they can easily run some stops and pop it up into the cluster around 320, and then that's where it should ultimately fail if this pattern is going to hold. All right, so that's just something to keep an eye on as this continues to trade out. Looking at tech, and tech is the market at this point. It has a huge weighting in the S&P 500. I think it's 25%, 22%, something like that. And so, when you have a sector that has such heavy weighting, and then within that sector, you've got about 5 stocks that make up about 40% of that tech sector weighting, then ultimately you've got 5 stocks that dictate where the market kind of goes. So if you have tech rallying, even though the rest of the market could be selling off and weak, which is what we have the rest of the market showing a lot of weakness, and we have tech continuing to show strength, then the market just goes nowhere. The S&P 500 goes sideways. So there needs to be some sort of convergence of this. There's a divergence right now between tech and the rest of the market. There needs to be some sort of convergence. The market will converge back to the mean. That doesn't mean tech has to fall. The rest of the market could be dragged up and move higher, or tech could fall. I'm under the impression that tech is going to fall. And this has been, this has been just a massive divergence in tech. So I'm watching for that because there could be a really good opportunity to short just the tech specific sector and Qs and XLK and maybe the semiconductors. But until I see some sort of a breakdown going back to tech, I don't see it here yet. So there's just nothing to do until I see some sort of a trigger on this chart. As of right now, tech is just moving higher. Looking at the weekly, you do have this possible resistance channel right here that we're above right now on the weekly. So if you get a big sell-off maybe into the close today or tomorrow, tech closing back below, in this 250 range on triple Q, then that is the potential for, a topping pattern, a big reversal doji, something to look for as we wrap up the week. XLV, there's nothing going on here. It's just sideways, nothing to look at, but a break in 97 is what we're watching for. XLF is the weak indice right now, and if there's going to be some sort of a recovery to save the market, it's probably going to be focused right here on XLF because it's showing so much weakness. The banks across the board, I've been watching them, are looking really weak. They just continue to sell off. So this is where you'll want to watch for some sort of news or some sort of headline trying to save the banks. This is where they're going to probably focus their recovery operation because the financials have broken down. And you can see here's your support. I did move my trend line. I previously had it right about here. I adjusted it, and you can do that. You can adjust your trend lines as you get more data points. I got more data right in this cluster right here. So we're going to mark that as trend line support reaction, reaction, and then several reactions here. We broke, and as you zoom in, you can see we broke, back test right here, and then a nice impulsive breakdown. So all we're doing right now is bear flagging. This is a bear flag, and if so, this should probably break and continue to break down. Heading probably to fill this gap is where it looks like it's targeted, right about there, down to 20, about 22. If financials are weak, the rest of the market is going to have a problem, and that's just because if the banks continue to show weakness, they're going to tighten up on credit, and when they tighten up on credit, the rest of the market is not going to be able to, credit is the lifeblood of the American economy. So that's just something to pay attention to. Okay, for anybody that's riding along with me on the Walmart roller coaster, still short this one. This is a longer term trade for me, so it's not necessarily something I'm looking to play out in the next week or so. It's really a longer term trade, and that's because I've been trading it off the longer term time frame. I'm trading off the daily chart here. My pattern, my bearish rising wedge, goes all the way back to the beginning of 2015. So when you have a big pattern like that, it takes you have to expect more time for this to play out. So what do we have? Well, we have a bearish rising wedge, lots of reactions here, and they popped it right here. This is the breakout move, but it ended up being a fake out. So I continue to see the breakout. I see the fake out, like recovery move right here that was sold into, and then again, this is just news induced. They floated out some fluff news on Walmart releasing some Prime Amazon Prime competition. They gave no details on anything, and ultimately the market just bought it off the headline. So that's fine. But this is still trading within the parameters of this bearish rising wedge pattern. So I have to continue to stay with the trade until the parameters fail. And because this had the breakout and we also had the fake out move right here and started to roll over, I think that this is probably about the end of this rally on this news. Looking at the weekly chart here, you can see we're just trading slightly above. I suspect by tomorrow, by the close of tomorrow, Walmart will be trading somewhere around the 126 level. So let's, I'll follow up tomorrow on Friday to see if I'm right on that call, but I suspect that's where it's going to be trading. And over the next few weeks, we'll probably continue to roll over. So just continuing to stick with the trade till it proves me wrong. Okay, Apple and Microsoft, there's nothing changed technically. Those are still moving in an uptrend. There's no technical breakdowns yet, so I'm not going to cover those. Winnebago, WGO, this is a subscriber pointed this one out. So again, if you have trades that you're looking at, put it in the comments below. I'll try to cover it. But the subscriber said looks like a good short, and I agreed with them. So here's what I see, and I actually took this trade. I'm short this trade, and it's working out so far. So thank you for that. And here's the thing. Winnebago, you have nice clean uptrend right here. You can see it on the hourly. It's just very clean. And we broke down. It started to get kind of messy in here. I didn't take the trade here, but then it broke down right here and chopped sideways. And here was the first level of support that I could see, which was the 61. And sure enough, you can see they chopped below it just yesterday and then recovered it, but then impulsively broke down. Nice big red impulsive candles here. And so this is just bear flagging as well. You can see it's just flagging. It's starting to recover on lower volume. Look at the volume here. You've got prices kind of recovering on decreasing volume. That's textbook flagging action. So this looks like at some point in time you're going to get another continuation to the downside. And I see this at least getting down to this 54. I think that's your next level of support. And we'll watch this. This could go a lot lower. So that is just the trade idea right there. Redfin. Redfin, again, looked a lot like DraftKings, and we ended up getting a 25% runner on that one. And Redfin looks like it's going to be doing that here pretty soon. So Redfin, you've got nice clean up trend right here in Redfin. We broke, and created another uptrend, and then we broke again. So yeah, it could create another uptrend. Could be a three times a 3 strikes and you're out or something like that. But I don't think we're going to get there. I think this is the breakdown of Redfin. Negative divergence is in play. You can see right here we got lower highs on the PPO and the RSI. Again, these are just momentum indicators. These are saying, this tells you if you keep getting higher peaks, then that says momentum's still there. If you start getting lower peaks, that says momentum is dying. And so that just tells you that it's a forward-looking indicator. It's a way to say, okay, momentum is fading. Price has not faded yet, but price is likely to fade or drop because the momentum is fading first. So oftentimes you'll see momentum start to fade prior to price dropping, and that's your tell that a reversal's coming or should be playing out. And then you look for the trigger, which is usually a breakdown of a trend line, some sort of support. You want to see support break, and then at that point you've got fading momentum, you've got no support or broken support, and it's just all the ingredients you need for a short to work. And again, most of my trade ideas are short ideas, and that's just because I think we're in a bear market. So if I'm wrong on the bear market call, then these short trade ideas might not work out. So that's just something, to take into consideration as you're looking at these. But again, here's Redfin going back, nice breakdown. This was my support that I found, was right here about 41. And you can see we tagged it just about there. And then we held it as support through here and got a little choppy right in here. But we've broken it. We're flagging. Volume is decreasing. This is flagging action right here. So I suspect we're going to continue to break down to this 36.75. And that's going to be about a 12% gain from when I pointed this one out the other day. 12.5% gain. So this one's profitable if you took it so far when I pointed it out in my post. Again, the other thing is sometimes let me pop this up. To wrap up, guys, sometimes I make these community posts. And so you'll want to hit that bell icon near the subscription area. If you want to get these in a timely manner, you probably need that turned on. Sometimes I don't have time to put out a whole video, and by the time I put out the video and you're able to watch it, you might not get the best entry on a potential trade idea. So yeah, in this one, I just said Redfin's breaking the channel right here, and it looks like it's, setting up for a good short. So again, I just put those posts out, and if you're able to hit that bell icon, you'll get notifications. I don't do them all the time, but sometimes I'll see something that just seems time sensitive, and I'll just try to get it out. So that's that. That's all I got, guys, for today. Go ahead and leave me a comment. Give me a thumbs up. If you're new, hit the subscribe button. I'll continue to try to put out these ideas, these stock market concepts. And again, it's not so much about how I'm trading. It's just about reading the charts. This channel is not about following me or, following someone that is trading super good or making a bunch of money. That's, if you want that, there's lots of stock trading gurus that, whether they're scams or not, I've got my opinions, but my channel is not so much about that. My channel is about reading the charts, telling you what I'm seeing in the charts, and then allowing you to see the levels that things could break down, and then make your own decisions, basically. So that's all this channel is really about. It's not about so much my trading ability. All right, guys, thank you, and I'll catch you on the next one. Bye.